Dear students, welcome you to session 9 video of the chapter Working Capital Management, Financial Management 6th semester BCom of Mangalore University. This session is about the preparation of the statement of working capital requirements using the components of working capital method. The problem goes like this. From the following details, prepare an estimate of requirements of working capital of Aditya Limited. Production 60,000 units per annum. Selling price rupees 5 per unit. Raw materials 60% of the selling price. Direct wages 10% of selling price. Manufacturing overheads 20% of selling price. Materials in hand 2 months requirement. The production time 1 month. Finished goods in store 3 months. Credit for materials 2 months. Credit allowed to customers 3 months. Average cash balance 20,000. Safety margin 20%. Wages and overheads are paid at the beginning of the following month, which means there is a time lag of 1 month. Now, under the components of working capital method, first we will have to find out the different components of the working capital. So, the current assets, the different current assets are the stock of raw materials. So we have this information, raw materials. Then we have the information about production time, the time it takes to convert the raw materials. So 1 month it is. So which means that it will be in work in progress. So we have work in progress. Finished goods in store. After finishing the production process, the goods will remain in store for 3 months. So finished goods are there. Then we have the credit allowed to customers, which means that we have credit sales and 3 months period is being allowed. So the current asset is debtors. We also have the cash balance 20,000. At the same time, there is a current liability, that is credit for materials. Material purchase, that the credit allowed is 2 months. So we have current liabilities, creditors, and we have the different current assets like the raw materials, the work in progress, finished goods, debtors, as well as the cash balance. And then we also have the information about wages and overheads paid at the beginning of the following month, which means that it is paid, there is a lag, that is delay in payment of these wages as well as the overheads, that is 1 month. So which means that we have outstanding wages. So this month's wages are paid next month. So outstanding wages are there, as well as outstanding overheads. Overheads are paid next month. That means we are not paying it in the same month. So we have two items. These outstanding wages as well as outstanding overheads are current liabilities. So we have the raw materials, work in progress, finished goods, as well debtors and cash balance as current assets. We have creditors, outstanding wages and outstanding overheads as current liabilities. So what we will have to do is we will have to estimate the value of these items. Then we have to find out the gross working capital, which is the total of the current asset. Then from the total of the current assets, we have to deduct the total of the current liabilities. Then we get the net working capital. And to the net working capital, we have to consider the safety margin, a safety margin of 20%. So whatever value we get, we will have to add 20% to that in order to find out the net working capital required. Now, first and foremost, we require information regarding the raw material units per unit price, the direct wages per unit, and the manufacturing overheads, because here it is given in percentage. Raw materials 60% of the selling price and direct wages 10% of the selling price. Manufacturing overheads are 20% of the selling price. So the working note we begin with. So selling price is rupees 5 per unit. So raw materials are 60%. So 5 rupees, 60% of 5 rupees, 3 rupees. Direct wages are 10% of the selling price. So 5 rupees, 10% of 5 rupees, 0.5 at 50 paise. Manufacturing overheads are 20% of the selling price. 5 rupees into 20 by 100, that is 1 rupee. So we have this information. Raw materials 3 rupees, direct wages 50 paise, and manufacturing overheads rupee 1. With this information, now let us prepare the statement. So the statement showing the requirement of the working capital. The columns are particulars and amount, 2 columns. Now to begin with the current assets. So first one is the raw materials. The year's production is 60,000, and for one material, the cost is 3 rupees. So for the entire year it is 60,000 into 2. But we know that raw materials, 2 months raw materials will remain in stock. So in a year we have 12 months. So 60,000 into 3 into 2 by 12, which means that 30,000 will be the raw material stock at any given point of time. That is 60,000 into 3, that is the entire year's raw material requirement, and that 2 months raw materials will remain in stock always, which means 60,000 into 3 into 2 divided by 12, the number of months in a year. So we get 30,000, which is the raw material stock. Now next one is the work in progress. So when it comes to work in progress, the work has begun and it is not completed yet, which means that full raw materials will be considered, but direct labor and other expenses, only 50% will be considered. So we'll see how it is being done. Raw materials, you can see 60,000 into 3 full materials into the production time is 1 month, 1 divided by 12, 15,000. Direct labor is 50 paise, 50% of that will be considered. So here you can see 60,000 into 0.5 into 1 by 12 into 50%. Again manufacturing overheads, you can see 60,000 into 1 by 12 into 50%, that is 2,500. So this one is the production time. That means the work in progress will be for a period of 1 month. The production time is 1 month, which means that the work in progress will be for a period of 1 month. So out of the entire year's production, 1 month will be always work in progress, that is 18,750. So here full raw materials and 50% of the direct labor and the manufacturing overheads are taken into consideration. The next item is the finished goods. So in case of finished goods, we take the cost of production. Here we have the information about raw materials, direct labor and manufacturing overheads. That is considered as the cost of production, cost of sales, as well as the total cost, 4.5. So 60,000 into 4.5 is the total cost of the finished goods, and finished goods will remain in store for 3 months into 3 divided by 12. So 60,000 into 4.5 into 3 by 12, 67,500. Similarly, we have debtors. Debtors, again we are going to take only the total cost, not the selling price. Selling price is rupees 5. The total cost is 4.5. So 60,000 into 4.5, and the credit allowed to customers is 3 months, 3 divided by 12, 67,500. The cash in hand is 20,000. So we have found out raw materials, work in progress, finished goods, debtors, and then finally cash in hand, which was given, and finally total of all these items we get the gross working capital. So the gross working capital is 2,03,750. Then we find out the current liabilities. So current liabilities, one is the creditors for the purchase of materials, and 2 months is being allowed. So 60,000 is the entire year's requirement units, requirement in units, into 3 rupees, that is the raw material price. So creditors are for raw materials, into 2 months which is being allowed, into 2 divided by 12. So 30,000 rupees. Next is the outstanding wages, that is wages are paid in the next month. So there is a delay in payment of wages, which is a current liability. So the wages amount is 0.5, 50 paise, 60,000 into 0.5 into 1 by 12, 2,500. Again we have the manufacturing overheads which are outstanding. Outstanding manufacturing overheads. Manufacturing overheads is rupee 1. 60,000 into 1, that is for the entire year, into 1 month's delay, 1 by 12, 60,000 into 1 by 12. At any given point of time, this 5,000 rupees will be outstanding. So 60,000 into 1 by 12, rupees 5,000. Then we find the total of the current liabilities. So when we add this, we get 37,500. So the net working capital is equal to gross working capital minus current liabilities, that is 1,66,250. Now to this value we have to add the safety margin, which is 20%. So 1,66,250 into 20%, that is 33,250. So that if it is added, we get the net working capital required 1,99,500. So under the components of working capital method, first we have ascertained the value of raw materials, then the work in progress, finished goods, debtors, cash. Then found out the total of, that is called the gross working capital. Then you have found out the creditors, outstanding wages and outstanding manufacturing overheads, and found out the total current liabilities. Afterwards we found out the net working capital. To that safety margin of 20% was added, and then found out the net working capital required. Students, if you have any doubts, please do ask me.